XII Union High School and Junior College, Pune, Economics, Standard 12th. Presented by Dr. Inderjeet Kaur Aluwalia. Chapter 9: Money Market and Capital Market in India. Part 7. In the previous videos, we have so far studied about money market in India. Now, let us study about capital market in India. What is the meaning of capital market? Capital market is a market for long-term funds, both equity and debt, raised within and outside the country. It is an important constituent of the financial system. Development of an effective capital market is necessary for promoting more investments as well as achieving economic growth. The demand for long-term funds comes from agriculture, trade, and industry. Individual savers, corporate savings, banks, insurance companies, specialized financial institutions are the suppliers of long-term funds. Structure of capital market in India. The capital market in India comprises of government securities, industrial securities market, development financial institutions, and financial intermediaries. That is, there are four important constituents of the Indian capital market. Government securities are also known as gilt-edged securities market. The industrial securities market can be divided into two parts. First, new issues market, and second, the old issues market. The third constituent of the capital market is the development financial institutions, DFIs. The various development financial institutions are IFCI, ICICI, SFCs, IDBI, IIBI, and UTI. The last constituent is financial intermediaries. The various financial intermediaries consist of merchant banks, mutual funds, leasing companies, venture capital companies, and others. This figure explains the structure of capital market in India. Now, let us understand each constituent of this market in detail. The first one is government securities. It is also known as the gilt-edged market. It deals in government and semi-government securities. Such securities carry a fixed rate of interest. Second, industrial securities market. It deals with the shares and debentures issued by old and new companies. It is further divided into primary market, that is new issues, and secondary market, that is old issues. Primary market helps to raise fresh capital through sale of shares and debentures. Secondary market deals with securities already issued by companies. Secondary markets function through stock exchanges. Stock exchange is an important constituent of the capital market. It is an association or organization in which stocks, bonds, commodities, etc. are traded. Bombay Stock Exchange, that is BSE, and National Stock Exchange, that is NSE, are the premier stock exchanges in the country. The industrial securities market thus can be divided into two markets. First, the new issues market, which is also known as the primary market, and second, the old issues market, known as secondary market. The third constituent of the capital market is development financial institutions, that is DFIs. They provide medium term and long term financial assistance to the private sector. The development financial institutions include IFCI, that is Industrial Finance Corporation of India, ICICI, that is Industrial Credit and Investment Corporation of India, SFCs, that is Small Financial Corporations, IDBI, that is Industrial Development Bank of India, IIBI, that is Industrial Investment Bank of India, and UTI, that is Unit Trust of India. The fourth and the last constituent of the capital market in India is the financial intermediaries. Financial intermediary is an organization which acts as a link between the investor and the borrower to meet the financial objectives of both the parties. These financial intermediaries consist of merchant banks, mutual funds, leasing companies, venture capital companies, and others. What are merchant banks? Merchant banks in India manage and underwrite new issues, advise corporate clients on fundraising and other financial aspects. What are mutual funds? Mutual funds mobilize the savings of the general public and invest them in stock market securities. What are leasing companies? They provide finance for acquiring plant and machinery, especially for small and medium-sized enterprises. What are venture capital companies? They provide commercial support to new ideas and for the introduction and adaptation of new technologies. What are others? In others, we could include national savings certificates, other financial institutions which provide finance acting as an intermediary between the investor and the borrowers. Thus, the financial intermediaries could be of merchant banks, mutual funds, leasing companies, venture capital companies, and others. Thus, the capital market structure in India constitutes four important parts. First, government securities. Second, industrial securities market. Third, development financial institutions. And fourth, financial intermediaries. Thank you.